The world of cryptocurrencies and banking crossed paths once again at at the Money20 conference in Europe on June 4 to 6. Fintech companies and financial service providers came together at the conference to talk money and technology, in particular, how the two can come together in a more efficient way. Since cryptocurrencies have entered the mainstream, largely due to a breakout year in 2017, both the fintech and financial sectors can no longer ignore the possibilities created by blockchain technology and digital currencies. A particular highlight of the Money20 Europe showpiece was a discussion panel titled Cryptocurrency, the Central Bank Question. It featured 4 prominent individuals from the Bank of England, Bank of Canada, Bank of Lithuania, and the Swiss National Bank. These 4 institutions have an incredible amount of influence on the way the world sees money, and more importantly, monetary policies in their respective countries. Over the past few years, central banks and financial institutions have had to grapple with the emergence of cryptocurrencies and their steadily growing adoption around the world. A few years ago, their proliferation was small, but that has changed considerably. In 2018, some of the world's most influential central banks are sitting up and taking notice of cryptocurrencies and what they like to describe as distributed ledger technology (DLT). Most have taken tough stances towards Bitcoin and other cryptocurrencies, but as this Money20 panel demonstrates, the tide is certainly changing around the world. Money20 Cryptocurrency, the Central Bank Question Panel, Amsterdam, Netherlands. Martin Etheridge, Bank of England. The Bank of England has been particularly thorny in its stance towards cryptocurrencies in general over the past few years. Despite this, the Bank of England began to change its tune more recently, announcing a cryptocurrency task force that would provide an in-depth study into the sector. Furthermore, the bank also expressed interest in the technology that powers Bitcoin, DLT and blockchain. Martin Etheridge is the head of division at the Bank of England and is responsible for Fintech. He also heads up banknotes operations and oversees the bank's work on digital currencies. Etheridge explained how the Bank of England has slowly changed its position on cryptocurrencies since its initial issuance of 2 papers back in 2014. We broadly concluded that we didn't see them as a major threat to monetary stability. We did not see them gaining mass adoption for retail payments at that time back in 2014. While the use of cryptocurrencies has increased, Etheridge said that there were no plans to launch a central bank digital currency. However, their latest review of cryptocurrencies in March 2018 saw no threat to financial stability, but Etheridge also said it's a sector they would monitor very closely. We recognize that in distributed system there is the potential for resilience, and other benefits of distributed payment systems is one that we want to make sure we are aware of, and that is fully integrated to the work we are currently doing to our own infrastructure. Etheridge also revealed that the Bank of England issues electronic liabilities at the central bank in the form of reserve accounts. This allows wholesale clients to make settlements of liabilities using its real-time gross settlement service (RTGS). This system is currently being overhauled, and the bank is still working on the technology that will power the revamped RTGS. It won't be based on DLT systems, but we expect and hope that it will be capable of interoperation with DLT systems in development by the private sector. Etheridge was also confident that cryptocurrencies don't pose a threat to the long-term existence of fiat currency. I don't see much prospect in the current iteration of crypto assets replacing fiat currencies. Who knows what the future will hold, but the odds are stacked in favor of fiat. It would take a fundamental shift in public perception of existing monetary system for that to happen. It's a totally relevant question. What is the currency used in society? And do people trust the existing authorities to provide functions of money that they need to operate daily lives? If they don't, they may look at alternatives. My view is that current system is not broken in a way that we would expect an alternative cryptocurrency to replace fiat currency in any major jurisdiction. Money20 cryptocurrency, the central bank question panel, Amsterdam, Netherlands. Dr. Marius Georgilas, Bank of Lithuania. Dr. Marius Georgilas is a member of the board of the Bank of Lithuania. Georgilas is considered an expert in fintech in the country and is a thought leader when it comes to the future of the banking sector in Lithuania. Georgilas addressed the talking point of a central bank digital currency by unpacking how cryptocurrencies came into existence in the first place. The product we banks are selling is trust. If our product is good, there would be no need to talk about cryptocurrencies. It's a matter of trust. If we trust the institution mandated and entrusted to keep oversight of our payment systems, ensure that money is not affected by excessive inflation, then there is no need for payment instruments or other means of storing value. But if society starts questioning, rightly or wrongly, or it thinks what we are selling could be done better, in a more convenient and cheap way, other things will appear. We as regulators have to react to that. We are not sitting entrenched in our positions. The work everyone is doing here shows that we are really paying attention. However, a point of concern for Georgilas is the possibility of these adopted cryptocurrencies leading to a major collapse, pointing out the reason why we're issuing warnings and pointing out the risks.